How to Trade SPY When You're Busy, Part 1. My name is Jeff. I'm a U.S. Marine Corps vet, 10-year truck driver, 3.5-year options trader. As a driver, I had to keep my eyes on the road and not on the chart. And so how did I still trade? You're busy, you got your life to live, you've got work to do, but you still want to trade. How do you do that within that busy schedule? That's what we're going to discuss in this video. Now, I've spent a lot of time learning and discovering things in the stock market that I would like to share with you. I can teach you if you're willing to learn, if you're open-minded enough. If you're busy, you need to front load your decisions into signals, and these signals tell you whether to trade while you're managing your busy schedule. I like to use traffic light analogies because I'm a former truck driver. It's easier to understand new concepts if you can relate it to concepts that you already know about. So I think we all know how to drive. At least I hope we do. At least whoever's watching, I hope you know how to drive and you've encountered traffic signals. They're really simple, straightforward. So why should this matter, what we're discussing? The content of this video is important because you only get paid when price moves, and these signals, they help you know when that's most likely to happen. And in my last video, I outlined these signals over here. I used a model day, November 14, 2023 at 9:45 a.m. And I used these signal metrics. Now, let's go over a model day. History doesn't repeat, it rhymes. When you find a model day is a day that you have observed that day in the market, and two things happen. You either wish you were part of that move, or you FOMO'd into the move. You feared of missing out into the move, and something about that day is special and for you. And so you should take that day, you should break it down to its component parts, because that day will repeat again. Not quite the same. And when you break it down into the component parts, what you're trying to do is being prepared to catch that move before it happens. That's the whole point of a model day, in breaking it down into signals. Let's go through a quick exercise where if you're busy, you'll be able to see like, wow, because I have these signals, I know what to do. Red means stop, don't go, don't trade. Yellow means, hey, this trade, you need to do a little bit more thinking about this trade. Do you have the time to think right now? If it's no, because I don't know, you're a truck driver and you're driving, then you skip the trade. If it's a green light and you have the opportunity to enter the trade, you enter the trade. Now, real quick, let's review our signals. So advance $ADD 1200. That means advanced decline has to be above 1200. Vold needs to be above 43 million. The cumulative tick needs to be above. I'm going to go over all of this. I'm going to show you all of this. It needs to be above 8,000. Those are the three we're going to use for our signals right now. Let the exercise begin. Now, this day here is November 14, 2023. This is my model day because this day kicked off the bull trend that we are presently in 2025. But this right here, November 14th. So advanced decline basically is how many more stocks are going up than going down. The difference between the stocks that are going up and going down. So this is saying 2,363 more stocks are going up than there are stocks going down. This is an extreme number. The Vold is volume. So of the stocks that are going up, how much more volume is going into them versus the stocks that are going down? And this is a positive number. So there's more stocks. There's more volume, more transactions going on in the stocks that are going up than there are going down. This is the tick. So how many stocks are ticking up versus stocks ticking down? And tick means like by price ladder, like moving up versus moving actually down. There's extremes in this tick right here. This blue dashed line is the zero line. Anything above that line is, if the tick holds above the zero line, that's a good thing. That means more stocks are moving up than they are moving down in this particular moment, because this is a 1 minute chart. Now, this is the cumulative tick. So this accumulates all the upticks versus downticks throughout the day. This is the part. So what I'm doing right now is basically front loading all the signals to you so that you understand these signals. And then when we continue forward, you'll be like, oh, okay, I get it now. So now price action is one thing that we must always consider, because it's a very powerful signal. So the time of this snapshot is 9:45 a.m. on November. 14th. And so this is what this day looked like at that moment. This is what the price action looked like. This is a 5-minute chart. What we try to do, remember, history doesn't repeat itself, but it rhymes. What we try to do is model a day throughout its certain time frames, and those time frames give us a signal. Hey, does this day look like that day during this time? So that you can, if the answer is yes, that's a green light. If the answer is no, that's a red light. All right, here we go. This is what November 14th looked like by the end of the day. Look at this advanced decline. It went up. This is ridiculous. This is a high number. 2,000, basically 2,400 more stocks went up than down. And of the stocks that were going up, 80, well, how much is this? This is an obscene number. Dang near 1 trillion units of volume went into the up stocks. And look at the tick. You see, this blue dashed line on screen is the zero line. And you see how it's just holding above for the most part, and only a few parts where it's below it. Now look at how much it has accumulated. 70,000 ticks up here above zero, then below zero. And look at the price action. So we want to capture this day. That's our model day, November 14th. Advance, is it above 1,200? No, it's not. It's a negative number. Is this above 43? No, it's not. It's a negative number. You see how quickly we can just start analyzing very quickly? This day at 9:45, January 2nd, 2023. This is just an example. It doesn't look anywhere near like the day that we're looking for. Our model day. Our model day didn't look like this. This is January 3rd now. Our model day, so this is advance. That's the Vold. The advance decline, I'm sorry I clipped this part out, but that's the advance. Negative 1,600. That right there is the opposite of our signal. Remember, we're looking for bullish days. This is a bearish day. This is negative 12, below negative 1,200. This is below negative 43 million. So this would be a good day. This would be a green signal for a bearish day. Look at the tick. It's down here. Negative 8 accumulation. January 3rd is a good day for a down day. This is January 4th. Does it look anything like November 14th? No, it doesn't. Look at the advance. I'm sorry I keep clipping it. I didn't realize I clipped this. But this is advanced decline. It's only 353. Look at the Vold. The tick is halfway. The price action does not look like our day. Real quick, let's go back to November 14th in the morning at 9:43. Yep, November 14th, 9:45 a.m. Look at the price action. It's going up. Look at the tick, 1,500. The cumulative tick, 1,500. Look at where the tick's at. The actual tick is right here. The cumulative tick is down here, 15K. The actual tick is way up here, way above zero. The Vold, 86,023. January 2nd does not look like that. January 3rd does not look like that. This is January 4th. It does not look like that. January 5th, negative. Does not look like our day. And this is the mobile version on how to basically quickly have a snap view. Look at the tick, negative 21. The Vold, 73. Advance 1,000. So on a mobile device, while you're on the go, on the move, you could quickly pull up your signals. You've already preloaded mentally what you know to look for, and at a glance, you can make a decision like, is this a red light, green light, or what? This is what I used to do as a truck driver. Once I trained myself, and it doesn't take that long, it takes like maybe 30 minutes of just memorizing your thresholds. Once I memorize all my thresholds for each one, it would take me like maybe 30 seconds. Within 30 seconds, I'll be able to know it's like, oh, this does not look like my model day. All right, I got to give you a January 8th example. So this is January 8th at 9:45 a.m. Advance, it's at 6. That's a negative number. This does not look like immediately what we would model. Or it does not look like our model of November 14th. But the price action does. the way that it's lifting, the way that November 14th lifted. Look at the tick. Nothing about this day resembles our model, and we model days. So I'm busy driving, doing something else. Then I check back again. I checked back sooner than 11:45, but what I saw, I was like, that's interesting. The advance suddenly just spiked crazy. The volt is at 22. It's building. It's not quite at the 43. It's 11:45, but I'm looking at this cumulative tick. It's at 40K. And I'm looking at the actual tick. It's holding above zero. And it's 11:45. And I look at the price action. I see it's catching lift. This is interesting. This could be a trend day to the upside. And, I had placed my trade. I actually traded this day. I placed my trade over here, which if you come back for the next video in the series, all of this will be explained to you. This is how you trade with a busy schedule. Fast forward, right? 1:45. I'm busy. I already put on my trade. I'm gone. I'm driving. When I finally check back, look at what's going on. The advance dropped a little bit. The volume picked up, but not as much. The tick is still holding above zero. It's not really spending any time down here. You see this blue dashed line? It's not spending any time down there. So I still have extreme confidence, but look at the price action, because price is the only thing that pays us. The movement of price is the only thing that pays us, I should say. Because if price stays the same, you're just at break even. So by 11:45, price has already gone up. Fast forward, I'm driving again. This is close to the end of the day. Look at price continuing to go. Look at the advance now. The advance shot all the way back up to 1200. It's meeting our threshold. This is meeting our threshold. Look at the tick. It's holding above zero. It's at 80K, darn near 80K right now. And look at price, because this is the most important part. This is what's paying us. From this 11:45 moment all the way up here, look at where price is going. And that's only at 3:45, 15 minutes before the market closed. The market closed 45 minutes prior, and look at what price did. It went up in one direction all day. Cumulative tick 88K. Tick holding above zero all day. Look at this, all day. The volt and the advance. So with a quick snapshot, we get a view of the market internals and price action. And that's our signals. But the point is to always find a day that you can model. Like, look at this beautiful day. Wouldn't you wish that you were part of this day? Well, you model that day based on each interval of time using your signals. So that, like, as the day is progressing, you're like, check mark, that 9:45 model it's fitting that model. By maybe 11:45, that's another check mark that it's fitting the model. And then maybe you enter in that trade, and then you check again, after some time, and you're like, wait a minute, what's going on? Or you could be like, yes, it's following my model, check. And so we model days because history repeats, not quite. Rather, history rhymes. And we want to catch a rhyming day. Now, do you need help with any of this? Because this is what I do now. You can contact me, and I can help accelerate your learning and education on trading in a more streamlined manner, one-on-one, or in my community setting, rather than you just watching a video. Come back tomorrow. I got more to share about this. This is the tip of the pyramid. We're about to get real deep. Join my community.